Are you looking for the next big tech stock to add to your portfolio? Supermicro has been making waves in the AI and data center industry, while quantum computing is aiming to revolutionize computing with cutting-edge quantum technology. But which one is the smarter investment? Today, we're putting these two stocks head-to-head in a profitability showdown, breaking down their financial health, profit margins, and long-term potential. Which stock is truly profitable? Which one is struggling? And which one should you consider investing in? Stay tuned, because the results may surprise you. All data and charts in this video are sourced from the website alphastockai.com, a powerful stock comparison platform packed with extensive performance data, helping you make smarter investment decisions. When it comes to profitability, numbers don't lie. We're analyzing 4 key metrics to determine how well these companies are performing financially. The first is net profit margin, which shows how much of the revenue is converted into actual profit. Supermicro has maintained a stable net profit margin ranging from 5.55% to 10.45%, averaging around 7.5%. In contrast, quantum computing has reported significantly negative net profit margins, reaching as low as minus 16,275.26%. indicating serious operational inefficiency. The second key metric is gross profit margin, which measures the company's ability to manage production costs. SMCI has held an average gross profit margin of approximately 14.6%, demonstrating efficient cost management. On the other hand, QUBT has struggled with negative gross profit margins in multiple quarters, a clear sign of cost-related challenges. Next, we look at operating profit margin, which reflects how efficiently a company is running its operations after accounting for costs. SMCI has maintained a steady operating profit margin of around 7.5%, reinforcing its ability to control expenses. Meanwhile, QUBT has been operating at a loss, with consistently negative operating margins, indicating its inability to generate profit from its core business. Finally, we assess return on assets and return on equity. SMCI return on assets has averaged around 4%, while its return on equity has been around 7%. These figures suggest strong asset and equity utilization. In stark contrast, QUBT has reported negative returns in both metrics, highlighting poor financial efficiency and ongoing struggles in generating value for shareholders. In the most recent quarter, SMCI reported a net profit margin of 5.65%, a gross profit margin of 11.8%, and an operating profit margin of 6.49%. While slightly lower than previous quarters, these figures still indicate a solid profitability position. QUBT most recent quarter continued its downward trend, with a net profit margin of minus 56.19% and an operating profit margin of -53.84%. Looking at the short-term trends, SMCI profitability metrics have shown a slight decline, particularly in gross profit margin, which dropped to 11.8%. This could be due to rising production costs or pricing pressures. However, the company remains profitable, unlike QUBT, which continues to face significant financial challenges. Analyzing these trends, we can see that SMCI, while still profitable, has experienced some margin compression in recent quarters. Investors should watch closely to see whether the company can stabilize or improve its margins moving forward. Despite this minor decline, SMCI remains financially strong and continues to generate positive returns. For QUBT, the numbers tell a different story. The company's negative profit margins and weak return metrics indicate severe financial distress. Without a clear path to profitability, investing in QUBT remains highly speculative. Investors should be cautious, as the company's struggles raise concerns about long-term sustainability. Now let's look at their price chart. For SMCI, its RSI has been fluctuating between 45 and 55 over the past few days, indicating a neutral momentum with no immediate overbought or oversold conditions. This suggests a lack of strong directional bias in the short term. Notably, its RSI was above 70 from February 18th to February 21st, peaking at 81 on February 19th, indicating overbought conditions during that period. This was followed by a decline, suggesting a correction phase. The 20-day moving average has been declining, currently at 43, which is above the 50-day moving average of 38, but both lines are below 200-day moving average, indicating no obvious trend formed yet and maybe in consolidation phase. Then let's look at QUBT price chart. Its RSI has recently moved from oversold territory to a more neutral zone, currently at 58. This suggests a recovery in momentum, but not yet reaching overbought conditions. And the current price has been crossed above 20-day moving average line, and the 50-day moving average line seems a resistance level around $8.3. The good news is that both lines are above 200-day moving average line, which is a lot better than SMCI price trend. This trend is also reflected in their relative performance comparison. So what is relative performance? Now this chart set it to be 14-day relative performance. So it calculates the ratio of price change over the past 14 days between SMCI and QUBT. SMCI here as the target stock and QUBT as a benchmark. If this ratio is greater than 1, that means the target stock outperforming the benchmark stock with stronger momentum, and if less than 1, it is underperforming. It's exactly 1, which means both stocks have the exact price change and in fact the same momentum. As you can see from the chart, SMCI has been outperforming in February and underperforming QUBT in the recent couple of weeks since March. For long-term investors who look at fundamentals, SMCI presents a stable option due to its consistent profitability and efficient use of assets and equity. Its ability to maintain positive financial ratios in a competitive market makes it a promising long-term investment. In contrast, QUBT remains high risk due to its continuous financial struggles. Even its short-term price trend is better. If you found this analysis valuable, don't forget to like this video to support the channel, subscribe for more in-depth stock analyses, and turn on notifications so you never miss an update. What do you think? Will SMCI continue to grow, or will QUBT turn things around? Let me know in the comments below. Thanks for watching, and I'll see you in the next one.